Thanks for staying with us on the news at 1. Let's take a look at your market news now. Asian shares step back from recent decade highs today, while major currencies held in tight ranges and oil jumped to a more than 2-year peak as Saudi Arabia's crown prince cemented his power through an anti-corruption crackdown. Mohammed bin Salman's purge led to arrests of royals, ministers and investors, including prominent business billionaire Alwaleed bin Talal. The news stirred concerns of Middle East money pulling out of some Asian markets. In addition, a weekend call by China's central bank governor for tougher financial regulation hit investor sentiment. Japan's Nikkei ended flat as weakness in the banking sector offset gains in index-heavy fast retailing, while Subaru tumbled after the company cut its annual profit forecasts. Hong Kong stocks paid sharp losses as mainland investors sought bargains in blue chips such as Tencent Holdings and China Construction Bank. The benchmark Hang Seng Index tumbled as much as 1.6% in the morning session, but recouped most of its losses by the close. Mainland China stocks ended higher as gains in consumer and healthcare firms helped the market recoup earlier losses. The Shanghai Composite Index gained 0.5%. A surge in shares of heavyweight Apple as shoppers streamed into stores to buy its latest iPhone helped push up major Wall Street indexes on Friday, as investors also assessed a mixed U.S. labor market report. The S&P 500 and Dow Jones Industrials recorded their 8th consecutive week of gains, while the Nasdaq posted its 6th straight-up week. U.S. job growth accelerated in October, but wages grew at their slowest annual pace in more than 1.5 years, in a sign that inflation probably will continue to undershoot the Federal Reserve's 2% target. The Dow Jones Industrial Average rose by 0.1%, the S&P 500 gained 0.3%, and the Nasdaq Composite Index added 0.7%. Now for more on the markets, we cross over to Nompumelelo Siziba. She's standing by at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. Over to you.
Thanks very much, Nzinga. Well, while global markets have generally sort of taken a step back from the hard run that we've been seeing in recent weeks, we see that the all-share index continues to charge ahead. It's now breached the 60,000 points level. That's the first time it's ever done so, with mining counters above 2% earlier in the session. And this is despite the fact that the dollar has been relatively stronger against other currencies, and this would normally be negative for commodities, but we are seeing those in positive territory at the moment. The local currency remains steeped in weakness. It's really struggled to recover since that midterm budget that was delivered on the 25th of October. And analysts expect that's going to continue. This as we wait for the ratings agencies, Standard & Poor's and Moody's, to pronounce on our credit rating on the 24th of November. And of course, the highly anticipated ANC elective conference coming in December. Let's take a look at the indicators. Well, I'm joined by Bright Kumalo. He's from Vestat. Thanks for joining us, Bright. Always good to have you with us.
Yeah, lovely to be here, Nompu.
Good stuff. Markets have run very hard, but we seem to see a bit of caution setting in today, although that's not the case with the all-share index today. Just give us your thoughts on what's happening globally and locally.
So yeah, if you look at the global markets, specifically the US markets and Japanese market, they've been hitting all-time highs. Well, Japanese market is recovering strong to, their all-time highs. And, you ask yourself as an investor, what's driving the markets, why they're going, into all-time highs territory. I'm talking about the Dow and the S&P 500. And the answer, you can see that, these big tech firms are actually releasing good earnings, and, there is earnings supporting, the rising tide. So, it makes sense why markets are going up. So it's not like it's just news or rumors or, so we kind of like a market that's going up because of fundamentals. And locally, we saw a similar story where Naspers is still, helping us reach those new all-time highs, like you're saying, 60,000 is where our index is currently. It's the first time we're crossing that mark. And, it's something to celebrate, I guess, if you're waiting for 60,000.
It is indeed something to celebrate. But of course, my constant gripe when I speak to guys of your ilk is that there's a disconnect between what's happening with the market and what's happening in the real economy.
Well, it depends, because if the market, you can argue that since Naspers is a big constituent of the top 40 or the Swix index, and most of its earnings it doesn't really make in South Africa, so you can actually make a good argument to say it makes sense why Naspers is going up, then the market's going up. And we know our market also is full of rand hedges, the likes of Richmond, British American Tobacco, Anheuser-Busch InBev, and as we have seen the rand going from basically 13 rand to 14 rand 18 currently now, those companies tend to do well, and that will push our market up as well. So that makes sense as an argument.
Indeed. Now, President Donald Trump has chosen a chap called Jerome Powell as the new Fed chair. Of course, he still has to go through a process. He has to be approved and so on and so forth. He's not even an economist. Traditionally, they are economists. What do you expect him to bring to that seat, assuming that he does go into that seat? And what are the implications for emerging markets like South Africa?
But he's a businessman. I thought that counts for something. Jerome Powell, like you're saying, he joined the Federal Reserve Bank to sort of the governors, the Board of Governors in 2012. So he's got some under his belt, some experience, and he's not a wild card. Trump expects that he's going to carry on with a mandate that to increase rates, but not too quickly. It would have been more fun if someone like Neil Kashkari, who's against the rates increase, had to come as the chair. But unfortunately, we get this guy who's boring and sort of predictable and normal, so which is unlike Trump.
It is unlike him. So it's going to be steady as you go in terms of US Fed policy and gradual increases in interest rates in line with the economy.
Business as usual, as they say.
All right. And then it's interesting here to see that foreign investors are buying, their buying and selling activities are changing quite a bit in terms of the bond and equities market. So previously we saw that there were net buyers of bonds, but now we see that changing and they're actually selling off our bonds. And of course,
but they're net buyers of equities again.
They're now net buyers of equities again.
Yeah.
So what's changed in the equity space? The bond market, we do understand that they were put off after that midterm budget statement.
Correct. Yeah, and obviously, like you were saying, you are alluding to the fact that there might be a downgrade to our debt, our local debt and our offshore debt, which makes sense. You look at the state of the economy today, we barely, growing at 1%, and next year is not even, promising as well, 1.5%, maybe 1.8%, if you're lucky. As an offshore investor, you look at the country and you look where opportunities lie. But again, for every buyer, remember, for every seller, there's also a buyer on the other hand. It's a zero-sum game. So when you hear these things that someone's buying this, someone's selling this, it doesn't really mean much as long as there's appetite for that asset class. For example, I'll make an example with our bonds. Let's say we do get the downgrade, they will be marked accordingly, and people that have the sole mandate of investing in junk bonds are going to come in and see opportunities. If it's a good opportunity and you can see that South Africa in the future is still going to be able to pay its coupon, it's worth the punt.
So things might not be as bad as we're anticipating then.
Exactly. Well, the economy side of things, something's got to give that side. But in terms of, asset classes and assets exchanging hands, I'm not too worried about that.
And then the rand itself, it remains highly susceptible to local and international factors. What do you see as major events that could kind of hold sway with the rand?
I don't know. There's too many own goals we've seen so far. So I don't know. The current ruling party could surprise you. Let's wait for December and see what happens.
Political questions get very limited answers from you. And then let's take a look at Anglo Gold Ashanti. They released an update on their finances and their production. Everything is looking pretty good, and we know that they were able to dispose of a couple of assets, which has been very nice for their cash flows and so on and so forth. I know you're not into gold per se, but when you look at it as a stock, what do you think of it?
Yes, I mean, you look at, I'm just talking the numbers here, production updates, the production is up 11%, cash flows better than the outflow of 41 million US dollars, they're sitting at 88 million US dollars today. The all-in costs are below 1,200, it's just above 1,000 US dollars. You look at the gold price today, it's trading at 1,271, so, it's, they're making, hey, while the sun shines, if you want to call it that. But still an asset class that we don't look at, we don't touch. We feel that the opportunity cost of investing your capital or clients' capital into this asset class, which is mining, cyclical type businesses, is very high. Where you can move money elsewhere, like companies like Mediclinic, Naspers, where they're still showing more value. And, it makes more sense to be in those sectors than in this one.
Okay. All right. Well, we're going to leave it there because we've run out of time, but it's always lovely to speak to you, Bright. That was Bright Kumalo. He's a portfolio manager at Vestat. After a short break, and Zinga has more business news for you.